All right, what's going on, everybody? We are live and we are alive as well, at least for now. Um, right now, we've got some speculation, some nerves building up around the world and in the markets, wondering whether we are entering another war. We got troops building up near Iran, and looks like within about at least Bloomberg is reporting 10 days or so, the president is going to decide what to do, there. Um, Obviously, from an investor's perspective, the markets are on edge right now. Looking at this, keep in mind, historically, unfortunately, war actually tends to be fairly good for markets over the like mid to long term. In the short term, though, is when you tend to see some of the volatility, when you see, flash crash, things like that. Um, so we'll see. We'll see what happens here. But at this point, yeah, it looks like we've got like we've got the risk of war building up, and I need to adjust my focus here. Looks like okay, there we go. That's better. Go ahead and throw any questions that you guys have for me in the chat. The way these work, if this is your first one, you can ask me anything. Literally anything. As long as you tag me in it, then and it's a question, then I will answer it. Tag me in your questions. Who are we fighting? Iran. Maybe. We'll see. Oil is volatile upside if war breaks out. Yeah. I would expect at least for the short term a spike in oil, for sure. I personally think he'll taco. That's the what is that? Trump always chickens out acronym. Last minute. It's it's definitely the only I would normally like agree with that. The only thing is the troop buildup has been odd. It's been different. Um, massive buildup of military presence. So it yeah, that part seems odd. I mean, here the bot like my personal preference is always no war. I think most people, unless you are I don't know, a politician or a part of the military industrial complex, I think most people's preference would be, hey, why don't we just not have wars? But of course we don't get to make those decisions. So um I just bought a single share of Lockheed Martin to see how it moves, as I think that's the perfect indicator. Yeah, I wonder how many what are the is it ITA? Is that one of the defense? Yeah, ITA is one of the defense stock ETFs. Um, it's up 1% today. Let me see if I can pull that up for you. Okay, so ITA is up 1% today, and it's up, what is that? 8% from just last Wednesday. So that could be an indication. Yeah, we'll see. All right, we got some questions rolling in. During times of war, doesn't the dollar strengthen? How'd that potentially weaken? Would that potentially weaken precious metals, right? No, not necessarily, because the dollar is the measure of the dollar versus other currencies. So you can have the dollar index, the DXY, move up and gold move up at the same time. You can have them both move down at the same time. You can have them, move up and down against each other. The dollar, the DXY is just a value of the dollar versus the other currencies in that basket. Um, So, in fact, I would anticipate, at least short, like typically when these kind of things happen, like, what was it when during Trump's first term when he did the strike against when he took out what was his name, Soleimani? Um, Gold, I think, spiked like very briefly. It was like an insane amount, like 10% or something. Um, Trump took out Soleimani. What was his name? Um, Soleimani. What was that? January 3rd, 2020. I forgot that was right before. It was right. That was January 2020. Interesting. Okay, so then what did gold do January 3rd, 2020? Where was 2020? Right back here. January. Yeah, look at that. Look at that nice little spike. So over the following days, gold was up. Yeah, little over 6% over the following days, and then obviously it retraced, fell back down. Um, but yeah, I would not. I would not look at something like this as being um, necessarily negative for gold just because it has a move or an impact on the dollar. All right, from Jar Payne, what is your take on the metals mining companies right now? Seems like some good earnings coming out. Yeah, as long as the price of gold or whatever metal you're looking at holds, then the earnings should continue to come out good for these producers. A couple of things. Number one, not just because it's a miner doesn't mean it's actually producing. There's a lot of companies that are just hoping to get bought out by a larger company. Exploration stage companies, very difficult to invest in those profitably over the long term. If the cost of energy and equipment and labor goes up, that can eat into some of the profits that they've gotten just from the price of the metal going up. What else? If the market starts to price in the price of metal going down in the future, it doesn't really matter what the earnings are right now. The market is a future discounting machine, so you're trying to figure out what is the likely outcome in the future, not what has happened in the past. And so, even if the earnings are good right now, the stock price still might suffer as a result of those future expectations, whether they're right or wrong. From Greenhorn Gold, how has war historically done for gold? Historically been bullish to neutral. Shipwrecked Traveler, how would you hold capital when playing long calls? I have 10 Netflix, 5 Amazon for reference. What do you mean? What do you mean hold capital when playing long calls? Not really sure what you mean by your question. There's a couple of ways to interpret that. So just for reference, my typical portfolio allocation is going to be 20% gold, 5% cash, 5% Bitcoin, 30% stocks, 30% real estate, 10% speculation. Of speculation, some of that's going to be hedging, some of that's going to be asymmetric trades. It's going to be things that that I publish in my private trading group, and that's a lot of those are going to be option plays. But you can also utilize options like leaps in your longer term portion of your portfolio if you'd like to try and boost your returns with extra volatility and extra risk. You want to make sure that you are being extra active and extra careful and hedging appropriately as well for those. But yeah, sorry if you have some clarification for that question, you can throw that in. I'm not really sure exactly what you're talking about there. All right. From EJB, what are your thoughts on escalating Fed White House rhetoric? What's the end game? Well, the end game is to replace Powell. The end game is tighter coordination between the Treasury and the Fed because the Treasury is under the executive branch. So it's like an extension of the White House. Um, so that's the end game. So this is a lot closer to the kind of like the 1950s playbook, the Fed Treasury Accord, having similar goals that are achieved with just agreement about directions. Um, and so this has been ever since Trump got elected for his second term here, he's been doing things to try and exert as much influence over the direction that the Federal Reserve takes things as possible. And that has included going in and having somebody find any and all dirt available on anybody at the Fed. That's how they found the mortgage fraud from what's her name? Can't remember. And I think that case is still ongoing. I don't think the Supreme Court has decided on that one yet. But and this is the building overrun on costs for the renovation of the Federal Reserve building. Every single thing, all of this has been, hey, we want the Federal Reserve to do what we want them to do, and if they're not going to do it, we're going to find ways to pressure them any possible way we can. And so the new pick Warsh is excuse me, seemingly as far as it seems like Trump can tell, going to play ball. But that's the end game to try and get the Federal Reserve on the same page as the executive branch. All right. How do you think AI may change the trading and investment landscapes? It is yet to be seen. So the short answer is I really don't know, and there's a couple of reasons why. And number one is because the the just be like this might be exposing some of my ignorance about how AI works, but as far as I can understand, um, just something that has the ability to gobble up a bunch of data, and even if it has the ability to recognize patterns in markets, that's actually not enough. Um, People have been doing this for a very long time, and it proves people, especially new traders, kind of stumble into this same exact problem, and then they realize that it doesn't work. Where you have the problem of overfitting, and AI also has the problem with hallucinating as well, which adds an extra layer of difficulty here. Um, but just because you can find something that has worked in the past, usually what that means is you've overfit the strategy to the past data, and simply just changing or moving around the time frame that was looked at will completely blow that strategy out of the water. In a bad way, it'll make it not work. So yeah. So in short, I'm not convinced yet that there's going to be some sort of a revolution in investing and trading and because of AI. I am constantly looking for ways and experimenting with ways to try and use it and apply it. And there's some like competitions going on right now where there are like AI stock pickers, and some of them so far have been doing okay, somewhat beating the market. But I don't know. We'll see. All right. I missed some of the questions, so I'm going back. I'm trying to catch them all. From Augmented X. Thoughts on 50% ex-US developed? I'm lazy. I don't know how to pick. I just want a decent performing two fund account, US and international. If you're lazy and you don't know what to pick and you want a decent performing of two fund account is arbitrary. So really, you want your like, why would you not just pick one fund that is all markets? like it's either VT or VTI by Vanguard. VT is the total world stock ETF. So now you just have one fund that includes everything. There would be there's no there's no reason that's not arbitrary to say I want a two fund. If you're going to do a two fund account, why not have a 5 fund account? Why not have a 10 fund account? Like if you just want exposure to the entire global market, there are funds that do that. You just need a one fund account. The nice thing about having multiple funds is just, quarterly or annually rebalancing your account. That way you get to take advantage of some relative differences in performance between the funds, and you're buying low and selling high between them. But again, you said you want to put this on autopilot. You don't want you to do any active work. There's nothing wrong with just choosing a one fund account. All right, from Dutch Jason, your opinion on AGQ. I bought in at 155, meant to sell at 190, missed the spike drop with a sick family member, so I still have it. Thoughts on this double leverage silver EFT? You mean ETF. All right, so let's go to AGQ. Let's pull that up for everybody. Okay, AGQ. This is ProShares Ultra Silver. So the number one thing is that I never, ever, ever, almost never, ever, ever touch leveraged funds. And the reason why is you can have underperformance in the leveraged fund, even if the underlying moves in the right direction, simply because of the volatility. It's called beta slippage that you get from volatility. So how do I put this? Okay, so yesterday, you may not have been on the live, but yesterday we were covering how losses are more powerful than gains. So if you have a loss of 10%, then you need a gain of 11% just to get back up to where you were. So an 11% gain equals a 10% loss. But losses are more powerful exponentially so. So the bigger loss that you have, the even bigger gain you need to get back up to break even. So 10% loss, 11% gain. 20% loss, you need a 25% gain just to get back to break even. 50% loss, you need a 100% gain to get back up to break even. 90% loss, you need a 900% gain just to get back up to break even. And so losses are exponentially more powerful than gains. This is why the best traders and investors in the world have all learned to manage their risk as the number one rule. Okay, what does this have to do with leveraged funds? Well, let's say you have a fund that goes down 10%, up 11%, down 10%, up 11%, down 10%, up 11%. And that's just, whether it's silver, gold, Bitcoin, whatever it is, overall, that would be moving sideways, right? Because 10% down, 11% up equal roughly. I think it'd be slightly at a very small gain, but essentially it'd be moving sideways. Well, if you have a triple leveraged fund, well, on the down days, you're going down 30%. But on the up days, you're only going up 33%. The problem is if you pull out a calculator and you're starting off at 100%, you go down 30%, now you're at 70. But if you only go up 33% from 70, you only get back up to 93% of where you were originally. And so even though the underlying is going flat, is moving sideways, 10% down, 11% up, it's moving flat, because the leveraged fund is making each one of those moves on a 2x or a 3x basis. It means that it's actually bleeding. So the leveraged fund will go down over time. And so even if the underlying moves in the right direction, you can still have the leverage fund lose money over time. So I almost never touch these things unless it's for a very, very specific reason, and I'm being very careful with it. Now, in terms of my opinion on silver overall, I think we're probably done with the big bull run. We're probably going to see sideways action and more volatility. I could be wrong about that. That's my expectation. But those are my two thoughts on leverage funds and silver. Excuse me. All right. From Eric Petros. Prediction on crude oil. If we go to war, how long will it take to hit 100? Um, I I would anticipate the price of oil. Well, first of all, I am actually bullish on oil overall. How long would it take to hit 100? I don't know. I think we'd get a big spike pretty much immediately. And then it could settle back down if it looks like it's not going to be a long, extended, drawn out conflict, um, which means we could get a flash crash in the market and then a quick recovery. It could just be some short term volatility. If it does look to be a long drawn out thing, then yeah, I think we could see oil head a lot higher. All right. BV Sherwood, what do you think? And how to use crypto like Zcash, XMR, Dash to generate income, lending it out as a hedge. I can't tell you that. I don't know. I don't use those. I don't touch anything. I've never will touch anything other than Bitcoin. Never have. I don't have any plans to in the future. Bitcoin is the only cryptocurrency that I like simply because, well, a number of reasons. Number one, the decentralized nature of the control, the organic growth from the beginning, the network effects, the security, other like second, third layer options to solve the problems of things like cost and speed of transfers. So I don't touch anything else. All right. Next question from D Boy Pirate King. How tall are you? I'm 5'10" and 3/4. So 5'11" with shoes on. Growing up, I always thought if I don't hit 6 feet, then I just thought like that was the height that you'd grow to if you were a man. And so I think it was God's little prank on me to make sure that I stopped right before that. All right. Question from the S Grizzly. In which stocks are you investing currently? I got a ton. I've got my what I call my Century portfolio. That's one of my kind of core holdings of stocks. Let me pull that up. We've got Berkshire Hathaway on there. Why is this taking so long to pull up? We've got Cummins, we've got Amazon, we've got Costco. Man, these charts are, my internet must be going slow. We've got Monster, we've got Toyota, we got ExxonMobil, we've got Caterpillar, we've got Chubb, we've got McDonald's, and we've got Waste Management. Those I would say are some of my primary long term holdings. I've got a lot more smaller positions than that. Like a lot. I've got a lot more positions that are smaller. Those are not my, and that's not my trading account. In my trading account, we're constantly switching out. I've got a couple of programs where I basically share my short term trades, a couple of different strategies. And one of them is focused on commodities. And in fact, this Sunday, if you guys aren't registered already, I highly recommend you joining my free Zoom call. It's coming up on Sunday, this coming Sunday in a couple of days at 7 p.m. You can click on the link. You have to register for it. It's free, but it's a Zoom call. You have to register with the link below. And I'm going to be detailing my commodity trading strategy. And it's a program that everybody who's joined has absolutely been loving it so far. Obviously, with the commodity super cycle going on right now and the boom that we're seeing across energy and materials and commodities, it's been a really fun time. So, highly recommend you joining that. Again, it's a free call. You just have to register for it. Okay. How do you from Moose Dog in the Garden? How do you purchase Bitcoin specifically for self custody? Any exchange website recommendations and tips for safety security? Well, I mean, it depends on how long you're going to be holding it and what percentage size of the position it is for you. If you're just looking for some short-term trading just to be able to get some price exposure, there's nothing wrong with using an ETF inside of a brokerage account. It's going to be really easy and cost effective to trade. It'll be really easy to track in terms of like for tax purposes, things like that, especially if you're doing it inside of an IRA or retirement account. But if you're wanting to hold it for the long term, for some of the other benefits of holding Bitcoin, being able to take wealth with you anywhere in the world, permissionless payments, things like that, then you probably are looking at owning actual Bitcoin rather than owning it through something like an ETF. And I recommend Swan Bitcoin for that. There are a bunch of different ways to do it that are all probably fine. The reason why I like Swan is because they're focused on Bitcoin only. They're not going to be pushing other cryptocurrencies in your face. They're not going to be making money off of other, crypto pump and dumps or anything like that. And so because they're so focused, their product is really, really good, specifically just for Bitcoin. They make it really easy to do auto purchases and then have the Bitcoin automatically withdrawn from them to a wallet of your choice. You can choose your own hardware wallet. They have a multi-sig wallet available as well. And so I like hardware or multi-sig wallets. Those are both good options. So I recommend Swan Bitcoin. I think I have an affiliate link for them in the description of my YouTube videos if you're looking for that. But I like Swan. All right. Let's see. Question from Eduardo Villanita. Are you invested in cryptocurrency? What's your take on Bitcoin, upside or more downside? Yes, Bitcoin, no to anything else. And long term, I am bullish on Bitcoin. I think it's an asymmetric opportunity, much more upside potential than downside. Although that also means that most likely outcome is that it does go to zero. That's how asymmetric bets work. And so I stick to 5% initial allocation and then 5% of 5% dollar cost averaging of newly invested money. Thanks for answering my question earlier. Appreciate your content and streams. Hope you have a good evening. Yeah, well, thank you for asking. I wouldn't be doing this if you guys didn't have a bunch of good questions. So I appreciate every single one that you guys throw in. How do you see this affecting rare earths? I am bullish on rare earths, definitely. And I've got a position. So again, when I tell you guys that I have a position in something, usually it's just so that you know where my opinion is and where my bias is. Obviously, I'm going to have a strong bullish opinion on something that I'm long, a strong bearish opinion on something that I'm short. But take it with a grain of salt because I've got a position. So I don't think I would have that position if I thought the opposite. And if I don't have a position on something, it's because I don't have an opinion that is strong enough to hold a position in it. Ooh, good question from Intellectualish. Thoughts on Robinhood Venture Fund announcement yesterday? Okay. So, man, I don't even know where to start. Okay. So, this is something that I want to put together. I want to distill my thoughts and put this together into maybe a longer form video. But essentially, at all investing, you're purchasing ownership in a business. That's true whether like you and your buddy start a lemonade stand and you buy the materials and you start a business. That's true whether you find some local mom and pop, self-storage company to purchase from them. That's true whether you buy shares of Amazon or Apple. You are taking capital and you are getting ownership of a business that is hopefully producing profits or cash flow or will in the future. And so when you talk about like private companies, private equity, when you talk about public companies, really the only differences there are legal lines in the sand. They're legal fictions that are made up in order to exclude certain people from having access. And those certain people are poor people. Pretty much every single law and regulation about money is maybe not designed, but it has the effect of keeping poor people out of the best opportunities. So even something like the pattern day trader rule that was established when the NASDAQ went up, everybody started day trading, and the Nasdaq couldn't handle all of the orders that were coming in. It just wasn't fast enough. The technology wasn't good enough, and so they came out with the pattern day trader rule and said, okay, you can't do more than 3 day trades in a 5 day period. Otherwise, you're a pattern day trader, and if you're a pattern day trader, you need to have at least $25,000. That eliminated like 95% of day trading, and they were able to handle it within years, just a couple of years. The technology improved. They can handle every single order now. And there's no reason to have that limit, but it prevents people with less than $25,000 from trading. And I think they're going to get rid of that rule if they haven't already. But I mean, it took long enough. Same thing with like private investing in private companies. Most private companies, if you want to invest in them, and if they're opening up around to new investors, you have to be an accredited investor, which means you either have to make a certain amount of money. Usually, it's 250 grand for an individual, have $1 million net worth, or you have to be considered a professional. You have to have a license, like a series. I think it's a 65 or 66. Um, if you if you want to invest in other private companies, oftentimes they have an even higher threshold, which is for qualified purchasers only. Qualified purchasers, you need a minimum net worth of $5 million, and the the like companies like Stripe, companies like SpaceX, companies like there's a couple recently that I can think of. Those are only open to qualified purchasers in the initial rounds. And so that's when the valuations are still low. These companies are still going through some massive, their massive growth curve. They're not close to the point yet of IPOing. IPOing is just crossing the legal threshold and checking off the legal boxes to be able to accept investor money from anybody. By the time they get to that point, though, they've already gone through a ton of their growth. And so all these rules do is prevent most normal people from being able to invest in them when they are growing. So now what you have is companies trying to find ways around these archaic, stupid, useless rules that really, like, okay, the other thing about this is like, they're designed to protect unsophisticated investors from loss, but 99 times out of 100, wealth is correlated with age. And so you have somebody who is, all they've done is they bought a house in the 70s, they put some money in their 401k from their paychecks, and now they're worth a couple $1 million. Right when they're retiring, they're allowed to take ultra risk and invest in these things. Whereas the person who's making, 150 grand a year and is 31 years old, they're not legally allowed to, even though they've got way more time to recover from this. And they stand to benefit the most from taking on risk for better returns in the early stages, versus somebody who's close to retirement or in retirement probably should not be taking those risks. And so it's completely backwards. And it just really precludes young people from being able to invest in these. Anyway, so there are now companies and ways and things people are trying to do to get around these archaic rules that shouldn't exist in the first place. And so you're basically setting up a company, a fund that invests in these pre-IPO companies, and now you're going to sell shares of this holding company to the public. And so this is similar to what Robinhood is doing with their, so that it gives people access to there's multiple layers in between, but it gives regular people access to these. The problem with it is when you have to get around these stupid laws, a lot of times you have to do it in a way that is ends up being not the best for for regular investors. So there's like one closed end fund that is doing this, and it gives people access to companies, I think, like Stripe and SpaceX and XAI and things like that. The problem is that fund, those shares can trade. It's a closed end fund, so it's very possible that they'll trade at wild differences between the share price and the net asset value of the companies that they actually hold. So without really knowing, because there's not the reporting requirements from the private companies like there is for public, you could be paying way more for access to these companies than they're actually worth, and people might not realize that. And So I'm right now in the beginning stages. I'm not a fan of the way that that some companies are trying to get around these rules. I like the spirit of it and I like the idea, but I think in execution it could land a lot of smaller investors with losses, big losses that they weren't expecting. I think it'd be much better to just have some massive deregulation and allow people to invest in what they want. And if they lose money, they lose money. Like if you that it should be a free country, right? If I want to invest my money in a private company and they want to accept my investment, why does somebody else have the right to tell me that can't happen? Um, but the direction things are going, I'm not expecting common sense deregulation. Okay, next question is from Chris Fouch. Any opinion on Ryan Cohen and Michael Burry commenting on his strategy? Super interesting to see how he's turned GameStop around. No, I'm sorry. I don't have any opinion on it because I don't know. I haven't looked into it enough yet. Um, yeah, I'm sorry. I don't know. From Dutch Jason, sounds like you're feeling better today. Definitely, definitely a lot better than I'm still not back up to 100%. But at least somebody yesterday said I sounded like I was about to cry. And so I don't think I sound like I'm about to cry today. Maybe I just sound like a smoker or something. I don't know. Um, all right. What are your thoughts on what's going on with Blue Owl and the credit market in general? Seems like liquidity issues and shady sketchiness that is probably more than just Blue Owl. Private credit has been having problems for a while. And so this looks like the first kind of crack that has actually appeared. I don't know if it's an actual like a something that you could look at as like a canary in the coal mine. Um, it's it's uncertain how kind of deep these problems go. Like, for example, a lot of people a couple of years ago were saying that the um, commercial real estate loans were going to blow up the entire market and cause another, global financial crisis. It's like, well, it didn't happen because the banks worked out, rollover and refinancing deals. So it didn't actually cause any problems. So um, it's like it's something to look at. It's something to be that warrants some caution, but it's not something that's like, oh, this is it. This is the first domino to fall in another giant collapse. Um, the best performing asset in 2026 so far is the VIX, up 38%. I I don't know if that's true. I mean, I know the VIX is up. Um, since the beginning of the year. Let's see here. Where's the beginning of the year? Right here. We'll just go from the bottom here just to benefit of the doubt. So 42%. I don't know if that's the best performing asset. It might be. What about like SanDisk? Okay, SanDisk is up 161% since the beginning of the year. So, and I'm sure there's others. That's crazy. I didn't know it was up that much since the beginning of the year. Um, so yeah, I mean, certainly the VIX is higher. I think there's a possibility for a fairly large VIX spike, especially if we do get some sort of um, an escalation in Iran, but we'll see. All right, question from Volga Vanna White. What are your thoughts on IREN? Long term, I am very bullish on IREN. This was one of the trades that I sent out in my private trading group back in February. And so anybody in my pretty much everybody in my group usually participates in most or all the trades, and we're up significantly on it. I am still bullish. I think short term, it's going to require a it's going to require another deal to be announced. Um, B, it's going to require the broad market to stop treating it as if it's a Bitcoin miner, which it's fair that it's being treated that way right now because I think 90% that's still what it does. But if you look at the major funds that hold it, like the top like ETFs and everything, they're all crypto and Bitcoin funds, blockchain funds, crypto funds, Bitcoin funds, and so that's a big reason why the price action is the way it is right now, which again is justified. And I just don't. I think that the market is wrong about that in terms of the future. We see politicians are getting into it. Uh, Institutions are getting into it. Analysts are upgrading their price targets on it, and so I'm very bullish. I obviously have a position on it. It's one of the early 2025 trades that I sent out in my group, and so we've done so far very very well on it, especially because we trade options, not just shares. Even if you were trading just shares, you'd be up a lot on it. But so I like it. Take it with a grain of salt, though. Obviously, positions like that are super risky, especially with the volatility. You have 60-70% swings from top to bottom in a very short amount of time. If you guys have questions for me, make sure you tag me in the comment. That way I can make sure I don't miss it. What do you see as the better financial path? Delay claiming Social Security versus working until 67? Well, man, right now there is more uncertainty to that question than I think there maybe ever has been, because a tradition you can't just take the traditional answers and the way to calculate it. Like, obviously, the longer you wait, the more you can get from it. The problem is the Social Security fund is going to be empty in 6 years. At that time, the government is going to have to decide what to do about it. One of the options is to raise Social Security taxes so that the amount that is going out is equal to the amount that's coming in. That will be politically very unpopular because young working people right now bear the vast majority of the financial burden in the economy and for the government, versus old retired people bear none of it. In fact, when you look at the net amount paid in to the government, taxes, benefits, entitlements versus the net amount being paid out, most people over, I believe it's the age of 70, maybe 75, are by far net recipients. And so politically, that would be very, very unpopular. It's definitely not impossible, and it's a likely outcome, but it'd be very, very politically unpopular. The second thing is just to borrow the difference, which means that you're borrowing money into existence. That causes inflation, so everybody pays for the increase through higher prices. The last option, which is the least likely, but it's still an option, is that the payouts get cut to match what is coming in. And that would right now equal about a 25% drop in payouts in Social Security. So if you're looking at, okay, I'm going to wait to maximize the amount that I'm going to get paid, you might be waiting and then you start taking your Social Security right when the payout gets cut. And so you might do better to start taking it early, because then you get 100% of a smaller amount for a longer amount of time before those benefits get cut. Unfortunately, it's there's no good answer here. The best answer is pretend it doesn't exist. And anything that you do get, you just look at it as gravy, and work to get to the point where you absolutely do not need it. Um, so yeah, unfortunately, it's not a good situation. No matter how it gets resolved, somebody's losing. And that's what happens when the government gets involved. It creates artificial winners and losers. All right. Heresy Financial, you can take, can you take one of the tests to become a qualified investor? Yes. I can't remember which one it is. I think it's the 65 or 66 or the 63. But you can do that to become a an accredited investor, not a qualified purchaser. So accredited investor, that's the million net worth threshold, or the income threshold of, I believe, 250,000 for an individual. I think it's 300 something, maybe 350,000 for a couple. To be a qualified purchaser, to allow you to access like most hedge funds and a lot of other private investments, it's just the net worth requirement. There's no test or anything like that. Okay, next question from Poaching 0521. What international markets will outperform the S&P 500 this year? Man, I wish you would have asked me this yesterday because my crystal ball just broke, and so now I can't see the future. And so I don't know the answer to which one will outperform this year. No, I'm just joking. I think that, well, number one, because it's just in general blanket statement fact, it's impossible to know the future. This is one of the reasons why diversification is a good idea. It's because it allows you to have exposure to other markets. Most of the time, like if you look back at the last, I don't know, 50 or 100 years, um, the number one performing stock market every year changes from country to country. And so if you have exposure to them, then it allows you to take advantage of that. And so I don't like having a really large exposure, but something like, a quarter of your stock portfolio being in at least companies that are global and have access to other markets, or index funds that are uh, uh, geared towards specific countries, or just ex-US, that allows you to take advantage of those. And I think this year, um, international funds have outperformed the S&P 500 by a pretty large margin. Um, let's take a look. So EEM. Now let's go SPY, and let's go 1 year. Okay, so for the last year, EEM is up 36%. SPY is only up 11%. If we go year to date, EEM is up 9%. The S&P 500 is basically flat. And EEM is the emerging markets index fund. So um, that's not necessarily just full foreign exposure, like developed markets. That's emerging markets. But still, I like having exposure at least somewhat. That way, between them, from one quarter, 1 year to the next, you get to rebalance between them when there's overperformance or underperformance. Buy low and sell high between them. All right. Question from L.E. Pulowski. Do you think the energy sector is the right play this year heading into the preceding years? Not necessarily the right play, but I'm very bullish on energy, and I have a lot of exposure to various stocks that are energy stocks. I think that's true kind of across the board. Like I'm long Exxon Mobil, I'm long Bloom Energy, I'm long um, uranium, I'm long some different nuclear stocks like GE Vernova, Oklo, URA. Um, I don't think I have any natural gas right now as of the moment. I might just be forgetting. But overall, yes, across the board, I'm very bullish on energy. Um, LMC 1103, thoughts on Microsoft stock? It's down quite a bit. Yeah. Um, Microsoft is one that I don't have a position in right now. Not necessarily because I think that it's well, it's good. And I'm not short either. So I'm definitely not bearish on it. Um, let's look at the chart. So Microsoft 1 year, let's see, we're basically flat over the last 1 year, but year to date, we're down. Let's see, how much are we down year to date? That's 17%. So we're close to bear market territory with Microsoft year to date. From the top, which was right here, to right now we're down 28%. So yeah, definitely bear market territory with Microsoft. Um, there, I have not found uh, a compelling trade on Microsoft either way right now. Um, it's a solid company long term. If you look at like the 200-week moving average, whenever Microsoft gets close to that 200-week moving average, it's like tends to be a good opportunity to get in. Um, Caveat to that being in like after the dot-com bubble burst, it took what is that, like a decade to finally start moving up again. But Microsoft is a company that has proven itself to know how to navigate and succeed through all sorts of different political environments, economic environments. Um, so I think it's a good stock. But again, I don't have a position in it. It's not even like part of my like long-term holdings right now. I probably have some exposure through like an index fund here or there, but it's not something that I found a compelling reason that looks like it's a strong enough reason that I think it would outperform other positions that I have. So because I don't have a position that gives you an idea of the strength of my opinion on it, I'm not super bullish or bearish on it either way right now. Um, like compared to like Amazon or Google, I'm much more bullish on those. Okay, let's see here. Um, Super chat from Kurt Rhodes. Thank you so much. I appreciate that. I don't see a question in there though. So if you did have a question for me, definitely throw it in there. Otherwise, appreciate the super chat. I don't know why. Well, I think I know why, just because YouTube gets a portion of it. But for some reason, like YouTube really likes super chats. They tend to promote streamers and channels that get a lot of those. I think it's probably just because they get a cut of it and they're a business. But either way, it helps, even though it's a um, seems like maybe it's a fairly nominal amount. It definitely helps, so I appreciate it. All right, from St. James Official, what are your opinions on the next 4 years given AI development? Do you see low employment, high yield, and product economy being sustainable? Um, New technology is always overestimated in the short run and underestimated in the long run. Um, for example, there are still businesses that use fax machines. It's 2026. We have text messaging, we have email, we have social media, we have we have FaceTime, and that yet there are still companies that use fax machines. Um, so the employment apocalypse that a lot of people are predicting as a result of AI, I just don't have a I'm just not confident that that people can change fast enough and uh, adapt fast enough to cause an employment apocalypse from just replacing people with AI. Um, I think the more likely outcome is that there's a general rise in productivity that starts sweeping through different industries. Um, and and depending on how widespread it is between, like, if it's like let's say there's one law firm that really goes hard on AI and they boost their productivity, then they just outcompete everybody. They're able to their profit just skyrockets. But if everybody does it, then that just pushes the price down because um, competition, um, like what happened with like TVs. Um, and so it makes things cheaper. So I think over the long term, there's more human labor that gets freed up, but in the short term, I think it still seems like it's probably at least the fears are overblown. By the way, guys, this coming Sunday, just a couple of days, I'm having an event. It's free. I'm teaching you guys my commodity trading strategy. And with the commodity super cycle going on right now, materials, rare earths, energy, metals, um, I don't think there hasn't been a time like this in a while where I think the market is positioned like it is to take advantage of the commodities super cycle. So I'm teaching you guys my commodity trading strategy. I'm also going to be extending an invitation to join my private program, which, by the way, everybody who's joined it absolutely loves it. I get unsolicited emails every single day from people who are in my program making let's just say very pleased with it. So the event is free. You do have to register for it. Link is in the description below. I highly recommend checking it out. Okay. Um, from Official Biz E, what do you think is one or two of the most potent need mover lessons that the average American who feels behind financially these days can work to improve their situation? I'm maybe you meant needle mover. Um, to improve your financial situation. Okay. um, there's one thing that you need in order to improve your financial situation, and that is increasing the difference between what you make and what you spend. It's increasing the amount you keep. So budgeting is important because you can outspend any income. Over 50% of households that make 300 grand a year or more are living paycheck to paycheck. What is it, like half of lottery winners are bankrupt within like 5 years. A good chunk of professional athletes are bankrupt within like 5 or 6 years of retiring or not being in the league anymore. So you can outspend any income. And if you think it's not possible to outspend $300,000-$400,000 a year, it's because you've never made that much money before, and you think, how could you ever do that? It's not only is it possible, it's easy. So budgeting is important because it's possible to outspend any income. Number one. Number two, increasing your income is important because you can't really coupon clip your way to wealth. Yes, if you make 50 grand a year and save extremely aggressively and live like you're on food stamps and you just never spend anything, you'll probably have like $1 million by the time you're 75. And that will probably just be enough to be able to, pay for your medical expenses and then, not have to, not have to live as a burden on other people at the end of your life. But that's not really an aspirational goal. If you'd like to achieve financial freedom sooner, then you need to do both. You need to look for ways to not just like increase your income by 10 or 20%, look for ways to like double your income, triple your income. You have to learn multiple skills that are complementary that you can stack together, either to very quickly move up a corporate ladder, get into like C-suite positions, or get into sales, or start a business. Those are really going to be your only options to have. Like, there are not a lot of job options where you can make more than to maybe $300,000 a year. There is very rare to have a job that will pay you really good money. You're either going to have to do C-suite stuff, sales, or run your own business. Um, and if you can keep your expenses low enough, you're going to be able to improve your financial situation very quickly once you're able to start saving and investing $50,000 a year, $100,000 a year, $200,000 a year. If you're only able to invest and save $2,000 or $5,000 a year, it's going to be very, very, very difficult for you to get ahead. So focus on learning skills, keep your expenses low, increase your income drastically, and invest aggressively. Okay, questions are rolling in. Sorry if I'm going to go back and try and get them all. All right, from Lastic. How do you think bank deregulation would affect gold prices? Would banks pivot out of gold and into treasuries? Banks don't have gold, at least American banks. There's I don't the effect that it would have on gold would be the global market's anticipation of inflation. And so I think it would be somewhat bullish for gold, but really the main effect, at least in the short term, would be treasury yields going down from a bunch of banks just doing QE for the Fed. And the deregulation is going to look like the supplementary leverage ratio disappearing, so that banks can buy an unlimited number of treasuries, and that treasuries don't count against their risk limits, which means now their balance sheet gets freed up for private lending as well. And so I think any effect on gold would probably be slightly bullish just from anticipation of inflation. All right, Moose Dog in the Garden. What, if any, ex-US countries or industries are you bullish on? Any thoughts on India announcing zero taxes through 2047 for Western countries building AI infrastructure there? Right now, my main international exposure, I'm personally not doing anything that is focused specifically on any countries. I think the one caveat there would probably be Brazil, because of the commodities play. In fact, Stanley Druckenmiller just updated his positions, and I think he's pretty heavy in Brazil now as well. A good ETF for that is EWZ. That's a Brazil ETF. I think India has the demographics. But the political environment matters a lot, whether it is, um, whether it allows for growth. When you look at like, there have been a couple experiments run throughout history, like when Singapore used to be a part of Malaysia, they seceded and went basically full economic freedom with no natural resources, and now they're like the richest place on earth. And Malaysia didn't change anything, is a lot less oriented towards freedom and growth, and there's a stark difference if you've ever visited Malaysia, and then visited Singapore. There's a pretty big difference. Even if you go to places like Kuala Lumpur and Penang, and then you hit Singapore, it's like, man, the best places in Malaysia are not even anywhere close to the wealth and the freedom and the economic possibilities that are in Singapore. Same thing, North and South Korea, Germany, West and East Germany. So a couple of times throughout history, we've seen little experiments run between pro freedom and uh, anti freedom policies, and wealth explodes where the government just takes their boot off the people. Shocker, right? um, and so policies matter a lot. I think that India has the potential for that. I just don't know. I just don't know if the policy will allow it. Okay. Next question. Hey friend, always helpful content on your channel. What can we expect by attending this Sunday's event? It's going to be about the commodity super cycle. I'm going to be talking about my strategy for trading commodities. It's going to be a lot of examples of trades that I've made in the past. Um, and not just me, but some of the best investors and traders throughout history. One of the reasons, talking about the reasons why commodities right now seem like they're, it's such a rising tide that lifts all boats. Um, so, I mean, come come with paper and pen handy. There's not going to be any requirement to do anything. Just listen and learn. So yeah, I mean, I highly recommend you guys joining. It's going to be a good time, and I'm going to be talking about the strategy that I use in my private trading program. So yeah. All right. Super chat from Capper Outdoor. Really appreciate that. Thank you. Love your shows, Joe. Been with you for some time now. Keep up the great work. For us little guys and gals, thank you. Peace on me. Man, you gotta be careful talking about pizza online nowadays. But no, I appreciate it. I the reason why I do what I do is because I I grew up. My parents had the potential, if they would have made better financial decisions. Um, like they had the raw ingredients there, but they always consistently made poor financial decisions. Growing up, the majority of the time I was growing up, my parents had massive credit card debt, like 60 grand, credit card debt, um, and it was constantly a source of arguing and fighting, and it was a point of stress. And growing up, subconsciously, I was like, I never want to have to deal with that. And so, fairly early on, I was, knew whatever I do, I'm going to figure out a way to not have to have financial stress in my life. And it took me a while to get there. I graduated from college with a ton of debt. But my wife and I worked pretty hard to get out of debt really quickly with not that much income. And I became a stockbroker, started learning about investing and trading and the markets. And there have been a couple of times in my life where I have felt extremely rich, where I felt extremely free. Um, and there have also been a couple of times in my life where I have felt extremely trapped and terrified, uh, not being able to fall asleep at night because I didn't know how I was going to pay the bills the next month. And money doesn't money doesn't solve every problem, but it does solve every money problem. And most problems are just money problems in disguise. And I've seen how much not only my life has improved from improving my financial situation, but also the lives of those around me and what I've been able to do for those around me. And to be perfectly frank with you guys, I could retire today. I could stop working, but I don't want to because, well, I would, I think I'd be setting a bad example for my children. B, it's like, what else would I do? It's like, these are the things that I'm doing anyway. I'm basically a full-time investor. I'd be doing these things anyway. And so my goal is to just share that with as many people as possible. Um, which is the reason why I do what I do, because if I can share that and help other people get to the same place and achieve financial freedom, then not only is it improving their lives, but it's also improving the lives of those around them. Um, like if you had an extra, if you had the ability to quit your job that you hate and do something that you actually enjoyed, and make money from that, um, I bet you your marriage would improve. I bet you you'd be able to spend more time and enjoy your kids might enjoy you more. Um, if you're not depressed every Sunday evening because you don't want to go into work the next morning, and it's going to be another 5 days before you get a weekend. I'm sure that your kids will their lives will probably improve. And the things that you can do for those around you, whether it's giving to charity, giving larger tips at the restaurant, um, helping out your family members, or people who need it, the lives of those around you are going to improve. And so that's what I do. What I do. Um, so I'm glad that it's working. Okay. Question from Armandillo. I've got about 15% in cash, 5% in gold. Would you recommend buying gold now? Um, well, that's not a full portfolio. So you talked about 20% there of your portfolio. The reason why I like personally, I like 5% cash, 20% gold, 5% Bitcoin, 30% stocks, 30% real estate, 10% speculation. The reason why I like so much in gold is, like, if you look at a standard investing modern portfolio theory, they say like 60-40 stocks and bonds. If you're really young, it's like 80-20 stocks and bonds. If you're really old, it's like 20-80. And so the idea there is you want a good chunk of your portfolio in something that is reserves. That way, when assets go on sale, you're not a forced seller. You can rebalance into those assets and buy them at those fire sale prices. And sometimes it doesn't happen from like a crash. Sometimes it just happens because you look up and gold has gone up over 100% in the last year and a half. It's like maybe now gold is 40% of your portfolio. Maybe that means you now can buy, you have some dry powder to buy some stocks that are on sale. And I know the indexes are at all-time highs, but there are a lot of stocks that are in bear market territory. We looked at Microsoft earlier. So there's a lot of stocks that are down 20, 30, 40, 50%. So maybe you're looking at like some really good deals. If you have reserves to draw on, now you can take advantage of that. The reason why I like cash instead of bonds, or I'm sorry, gold instead of bonds, is because it gives you a real reserve, historically speaking. It preserves your purchasing power. Bonds return less than the rate of inflation most of the time throughout history, at least over the last 100 years or so in America. And so that's why I like gold, is because it does a better job of preserving your purchasing power. It operates like real reserves more effectively. All right. Super chat from Ellie Pulowski. Thank you. I appreciate it. Thanks for all you do. Here's a token of appreciation. I've learned a lot from your videos. Hope you feel better soon. Thank you. And then a super chat from Official Biz. I did mean need a mover. Okay, good. I'm glad I interpreted that correctly. All right. Okay, next question here. And guys, this is going to be the last one. Don't want to completely lose my voice today. From Verinder. What will be the next bullish catalyst that has significant impact on short term? Everybody has eye on AI spending. All Mag 7 down, but Apple not down as they don't spend on AI. Apple is a funny one because they seemingly missed the boat on on AI. It's like they had like a 15-year lead on everybody with Siri, and just completely dropped the ball when they tried to roll out their AI Apple Intelligence. What was that, like a year and a half ago now? It just didn't work and was terrible. And so everybody's like, oh, dumb Apple missing the boat on AI. Meanwhile, now Mac Studios and Mac Minis are sold out for like weeks or months, like everywhere, because so many people are buying so many of them to run these LLMs locally, like what is it, like OpenClaw or Moltbot, Claudebot, like those the local ones, and so everybody is buying their hardware like crazy, and they're probably going to end up being a pretty decent winner in this. just because of their hardware. And I think now they're partnering with Gemini, Google's Gemini, to integrate, since they can't quite crack their own for some reason. But anyway, yeah, Apple's an interesting one right now for the whole AI thing. Next bullish catalyst. Um, there's always a lot of catalysts that are potential catalysts in the market, but the thing is, you don't know which one, if it is just one, is going to do anything. I think if I had to put money on it, I would say I would say it's probably going to have to do with the next Fed chair. I would say it's probably going to be like the bank deregulation, or the next round of QE. Um, that's probably, in my opinion, the most likely one. But we'll see. It could just be fears right now that are being priced in by the market evaporate. And if those fears evaporate, then markets can pop. Okay, guys, that's all. Really appreciate it. Lots of great questions today. Thank you for showing up. And don't forget, if you haven't already, register for my event on Sunday evening. And by the way, guys, don't tell anybody I'm telling you this, but even if you can't show up live, register for it, because I'm going to send out a replay after. So even if you can't show up live, make sure you register. That way you get access to the replay. We're going to be going over my commodity trading strategy. And in the midst of this commodity super cycle, I'm not sure there's a better industry, across energy and materials and base metals. And we're going to have a good time. So, all right. Thanks, guys. We'll see you next time.